Boom. All right. So let's share my screen and let's see what we have for news. So last week was a very interesting week. We had the Feds. So we had the Feds speaking, and we also had a whole lot of reports. Actually, in the last 2 weeks, we've had Jerome Powell speaking, which that creates volatility in the market. We also have rate cuts. We've been on the edge to see if we're going to get a rate cut in September, and it looks like we're going to get one. So there's just been a lot happening in the markets in the last 2 or 3 weeks, but it looks like we still come out on top, and majority of the top 10 of the SPY is green since the big sell-off. All right, so let's look at the calendars real quick. So you go to products and trading view, calendars, and then economics. So I like to check the economic calendar to see if there are any major reports or events coming up in the week that could drive trades one way or another, and if not, what to do about that. Let's see, Ross said a 0.25 cut may be priced in likely. Yeah, that's what I'm thinking as well. A 0.25 cut could potentially be on deck, but I mean, again, with these things, you just never know. But that's what it's looking like so far. 1 second here. All right. Let me move. Oh, here we go. Move this forward. Okay. So looking at the economic calendar, Monday we have the durable goods order month over month, which I don't know if that's really going to be a deciding factor in the market. We'll know at 8:30 Eastern Standard, but I don't think that's going to drive. I think the market, we've already decided which way we want to go. So I don't think any bad news right now will stop the train unless it's something bad as far as inflation or jobs. Really, number one being inflation, because we're trying to get inflation down. The Feds have already given up on the 2% even point. They said, close to 2% is good enough. So I don't know if durable goods will give us any issues. We don't have any major reports on Tuesday and Wednesday. Thursday and Friday, though, we do have some really important reports. So we do have the GDP growth rate, which this is just going to tell us, this is quarter over quarter. This is going to give us an example of if we're growing or if we're shrinking. Right now, the Feds kind of wanted to slow things down by doing a rate pause. And now if we can show that that we're still stabilizing, I think that, again, this is just going to double down on the fact that we get a rate cut. So right now is like the rate cut is pretty much going to happen. Now we need to know how much. Is it going to be 0.25? Is it going to be 0.50, 0.75? And depending on the how steep cut is, could drive the market one way or another. So, and then we're also wondering, like, how many are we going to get? So this is going to be a helpful report. And then on Friday, we do have the core PCE, which, again, this is tied into inflation. So it's going to be important. So the bottom half of the week, we have some important reports. And the beginning of the week, we're pretty good. So if we're trading options or we're in some short-term trades and we're looking at Monday, Tuesday, Wednesday, it looks good from a major report standpoint. Again, the market is wild. Anything could pop up and happen. But as far as the things that we can predict, it looks like Thursday and Friday we'll get some volatility, but Monday, Tuesday, and Wednesday we should be good. Do I have any questions? Let me check the chat here. Yep, NVIDIA's earnings. Yeah, that one's going to be important for sure. NVIDIA's earnings is a report itself. So we'll be talking about that in just a second. All right, cool. Actually, what we'll do, so normally, since I don't have any questions, I'll go ahead and start the indicator breakdown. But normally what I would do is break down the SPY. That's probably my favorite stock. It's the easiest to track. Also the easiest to trade when it comes to options, in my opinion. But since we have NVIDIA having its earnings, what is that, Wednesday, the 28th? Yep, Wednesday, the 28th. I'm going to break down NVIDIA instead of doing the SPY, and then we'll come back to the SPY later on. So let's do an indicator breakdown on NVIDIA. Ooh, sorry, I've been drawing all on this chart. Let me reset it. Let me delete some stuff. I think we had a discussion on this one. Pretty sure Ty and I probably did all of this. Give me 1 second. Let me just clean all of this up. My newer people, I know you're like, what? What am I looking at? All right, let's clear all of this up. And when it comes to the indicators that I use 5 main indicators. You don't have to use 5. When I first started out trading, I only used 3. And then out of the 5, some of them are giving me some similar information, and you don't have to use them all. But for the most part, this is how I trade, especially with swing trades. All right. So these are the indicators. I'm going to break them down one by one. The first indicator I like to look at is the RSI. The time frame that we're looking at in video on is the day, the 1-day chart. So again, that means every single candle that we're looking at is going to represent 1 day. All right. The RSI. So the RSI is a relative strength index. Really simple indicator. It's just telling you if the stock is overbought or underbought. So if a stock is overbought, of course, that's something that you don't want to touch, because eventually it's going to pull back. It's going to cool off, right? If it is overbought, that means it's hot. Everyone's buying it up. The price is climbing, but we all know that the faster things go up, the quicker things can drop, right? So for instance, when you look at the RSI, you have this level at the top that's at 70. 70 is kind of the designation for it being high as far as being overbought. Anything above 70 is for sure overbought. So I would never buy a 79 RSI. I wouldn't buy a 77, and I wouldn't for sure buy any 80, 81, right? I like my RSI to be under overbought. I don't want it to be overbought. I need it underneath this purple line at 70. So again, the top side is going to be overbought. The bottom is going to be oversold or underbought. However you want to flip those words around, they mean the same thing. The bottom is going to be 30. So the top range is 70 for overbought. Underbought or oversold is going to be 30. So once it's down at 30, that means that investors and traders really don't have any interest in it for that time period. Not meaning that it can't come back, but they just mean that for that time period, they've been selling it off, maybe moving to a better sector or a better stock. Now, what I like to do with the RSI is just find something with the RSI is between 45 to 55 pointing up. So that's this range right here up to this range. So around this middle dotted line, 5 points above 50 or 5 points below 50 is what I like. So I like 45 to 55 pointing up, because that means that we have momentum. And if I hop in a trade, let's say when the RSI is right here at about 45, I could have got in, rolled it up. It went up to, what is this, 62, and I could have took profit here. You could also take profit at 56 because you got in at 45. So that's why I like the getting in the RSI around 45 to 55 pointing up, again, because it has that momentum. Now, where do you get out? You can get out anywhere between 60 and 70. 60 is being extremely conservative. 65 is kind of a warm spot for getting out, and then 70 is like if your RSI is at 70 and you've been in since 45, yeah, you're making some money. I would say take profit before it pulls back on you. Excuse me, and you take profit on the way down. So, do I have any questions about the RSI? Again, extremely simple. Overbought, underbought, 70, 30. I like 45, 55 pointing up, and then we can move to the next indicator. All right, cool. No questions. Let's keep it moving. All right. Let's talk about the MA ribbon first. All right, so the MA ribbon, it stands for, and you can see that it's gone now. Let me actually hide the BRVP. All right, MA ribbon is this band of squiggly lines. So I have about 4 MAs. Sometimes you may see people use 3. Sometimes you may use 2. When I first started trading, I only used 2. I used the 50 and the 200. I'll explain to you what that means in a second for the people that don't know. But those were too slow, so I decided to use 4. And now that I use 4, I really don't pay attention to 3 out of the 4. I only pay attention to this yellow one, the gold line. So this is the settings for each of my lines. So I have a 20. And since we're on the day, we call these 20-day moving averages. So MA stands for moving average, which is basically the average stock price over any given period of time. So I have a 20 MA, 50 MA, 100 MA, and 200 MA. With this setup, again, you don't have to use 4. You can use 2. What I would recommend if you're going to use 2 is the 20 and the 50. If you're going to use 3, 20, 50, and 100 is what I would recommend. But I like to use 4, 20, 50, 100, and 200. It gives me a good view of the landscape. Also, the 200 day moving average gives me, what's the long shot as far as a bottom when I'm looking for a pullback or I'm looking for an entry, around the 200. It helps me with that. So I like to add that 200 in for a fourth moving average. So again, 20, 50, 100, 200. I only really pay attention to the 20, and I need to know where my 20 is in regards to the 50, 100, and 200. So if you look at this here, and you can see that when these are stacked on top of each other in chronological order from least to greatest, you got 20, 50, 100, 200. In that order, the stock, as far as the candles go, they're going to be spiking, right? And then also, if it comes down into contact with that 20, it's going to bounce off of that 20 as long as they're in that order, right? 20, 50, 100, 200. And again, I'm not saying 100% of the time it's going to bounce off the 20. I'm not saying that, but I would say 7 to 8 times out of 10, if you have this formation happening, and I can even pull the chart back, if you have this formation happening where you have the 20, 50, 100, and 200 in that order, you can even see where NVIDIA was going up. It pulled down here, bounced off, went up here, hit the 20 again, bounced off, and then eventually it broke and it went below the 20 and the 50, but then it came back up and it repeated the same thing by bouncing off the 20 here, here, and here. So when the 20 goes underneath the 50, that's a sign that the stock is going to be going down. And what you want to happen is once your 20 goes underneath your 50, you have to make a decision. Either you exit the trade because you could be going in a downtrend, or you need your candles to break above both moving averages to clear the coast pretty much. So if the 20 goes underneath the 50 and your candles are, let's say, in this area, right? It's above the 20, but it's not above the 50. Then I would wait. I would wait for confirmation. The next level of confirmation that I would need is at least a candle or two above this 50 MA. And you can see in this area, we got a candle. We actually got 3 candles that took us above the 50 MA. And then we went straight into consolidation here. So anything above this 50 while the 20 is below would be a good sign for me, because that means that if this continues to climb, it's going to bend that 20 up, and that 20 is going to be climbing and climbing until it crosses back over that 50. And once you get the 20 back over the 50, good. Chart is simple: 20, 50, 100, 200. You can count on that 20 being a bounce point. So that's why I like using this setup. Again, you don't have to. I've seen EMAs and VWMAs and whatever works for you. But for me, when it comes to swing trades, I think this is one of the easiest ways that I've been able to find that I can make profit on my trades. It's just by finding a chart. Again, when I'm using a strategy, I find the chart to fit the strategy. Like, I don't look at a chart and say, well, my strategy doesn't fit, I'm gonna try to make it fit. Nope. There's thousands of stocks that you can trade, and I would recommend just searching until you find a stock that actually goes with your strategy, and then just trade the easy layup trades. Don't try to make anything harder than it needs to be. But do I have any questions about the MA ribbon? Again, it's extremely simple. You may have to use it a few times to get used to it, or you may have your own variation of it. But it's extremely important when it comes to setting up trades. Let me see. Any questions? Nope. All right, let's keep it moving. All right, so next thing, let's talk about the VRVP. So the VRVP, which is this tool on the right-hand side, or I said tool, indicator on the right-hand side of my screen. This indicator is basically telling you where the heavy volume is at. The further these nodes, these rectangles are called nodes, the further these nodes stick out to the left, the more volume is there. Take this node here, for example. If we look, let's see, whoa, there we go. I wanted to zoom in instead. All right. So if we look at these 2 nodes here, let's look at these top 2 nodes. We don't have to look at this bottom one, but if we look at these top 2 nodes and we scrunch it up, we can see where we found a lot of the candles as far as consolidation. You can look on the VRVP and see that there's a lot of volume sitting right there. So that means that the further these nodes stick out, the more you're going to get consolidation, and the harder it is going to be to break past those levels. Also, if we look at the data window and you hover over these nodes, the yellow and blue actually mean something. So looking at this node that we're on, I want you to watch this area for the VRVP. Looking at this node, well, let me back up. The VRVP stands for the visible range volume profile. let me start there for my newer people. The people who've been here for a while, you already know how this works. But all right, the visible range volume profile, the working is in the name. So the visible range means that any candles that you have visible, starting from this candle right here on the left-hand side of my screen, all the way to the candle on the far right, anything that's visible is going to give you the volume profile for whatever candles are visible. That's what the visible range volume profile stands for. So again, it's giving you the volume at certain price points versus giving you the volume per day. I think volume at price points is more important in my opinion. But yeah, all right. Just wanted to back up and give you all that. All right. So again, the VRVP is telling you how much volume is at the level. It also splits the volume versus buys and sells. So when you hover over this node right here, on this side is where we're going to be watching. If we hover over it, we can see that the up is at 651.99. So that's 652 pretty much. Up means buy volume. So up is buy, down is sales. So we have up at 651 and we have down at 663. So that means that there is more sales than buys in this area. And that's what the VRVP is telling us. How much buy volume versus sell volume is there. Let me see. I have a question in the chat. Aaron says, would you use these tools for all time periods or the daily time period only? Great question. So the tools that I've showed you so far, I would use, you can use for any time period. Some of them you may need to adjust. Like I know the VRVP, you could adjust if you wanted to on lower time frames, but honestly, the VRVP with the basic setup works on all time frames because it adjusts based on what's given on your screen. So all of the other indicators work on lower time frames as well. Again, you can get them to work a little bit better depending on if you go down to lower time frames or you move up to like a month or a year chart or a 6-month chart, so on and so forth. But yeah, they work for a majority of the time frames we're going to be looking at. Does that answer your question, Aaron?
Yes, it does. Thank you.
Perfect, no problem. All right. What was I? All right, yeah. So VRVP again, this is going to give you the buys and sells. That's important because if you're in a trade, let's say you got in the trade, if you bought Nvidia back here at 59 bucks and you were trading up and then you're coming up against a level like this at what 86 to 94. We'll just say 86 to 96 because I think the top of this is 96, 97. So yeah, let's say 86 to 96 is where we went into consolidation. This could be a point to where you can take profit and then you can wait for the next move, a breakout either up or down, because consolidation always leads to a breakout. If it's consolidating, it's either going to break up or it's going to break down. The other indicators are going to be good at identifying which way it's going to go. But for the most part, consolidation just means that energy is being stored and the move is going to be made in the future one way or another. And again, if you got in down here at 59, you rolled up, boom, you hit consolidation. You see the VRVP is telling you it's a lie. It's a war pretty much happening here between buys and sells. That's a nice place to take profit. Wait for the breakout to either side. We can see that obviously this broke to the upside. You could have got back in at 100, took it up to, what is this, 130 to 140, took profit, got out, rinse and repeat. But that's the VRVP. It's a newer indicator, so a lot of people don't really know about it. I know people use it in Forex and crypto. Sean, he's our crypto content creator. He's actually the one who told me about it, and I decided to use it for stocks, which has been super helpful, even on lower time frames. I've used it on minute charts, 5-minute charts, so on and so forth. Do I have any questions about the VRVP? All right. Thai, you got a question?
Yeah. So basically, right now, NVIDIA is in a period of consolidation, right? Like brief consolidation.
Yep.
Is there a way for us to look at VRVP and predict how it's going to break out from consolidation, either downwards or upwards?
Yeah, that's a great question. So what I would do is check the nodes. So currently, if I hover over this node, we see we got, and again, I'm watching right here. This is where the data is going to come out. So if I hover over this node to where we have these consolidating candles to where NVIDIA was going up, but then it hit like a ceiling and started to chop around. Hovering over this node tells me that there's way more down volume than up volume. Up, we got 87. Down, we got 157. So that means that this is a wall. We're going to pull back. If I go down to this node, we still see up at 173 and down at 167. So that means that to get through this node, we would have to pull all the way down and close below around 125, 124 to move on to the next level. But if we move to the next level, there's even more buys that are just waiting right here. So underneath 125, there's a lot of buys sitting right here. Now we break below 121, then we start to go into the territory to where there's more sales. Again, if we're looking at the VRVP, we can see that the down is at 180, the up is at 152. And then if you go down to this level, you can see there's even more down, 221 to 184. But right now, it looks like the next two levels to the downside, there are some buys waiting to happen. And especially if we hit in this 120 to 125 range, it looks like some people are waiting to buy. Also, you can see, I'll put a line right here. You can see that this line is breaking a lot of those candles, and we have a lot of chop and consolidation at that price point. You can even see this big red candle touched it, and then the next candle was immediately green, almost overtaking that one. So yeah, consolidation is what we're looking at.
So BRVB is basically the pre-orders. So the orders are ready for buy and sells.
Yep. I can
Okay,
send you we have a breakdown of the VRVP. There's also like a 30-minute video on how it works and how it's constructed. Super elaborate, but the print of information is simple. So if you want that, I can get that to you once Mark
sure.
goes.
And the blue up means buys and down the yellows mean sells.
Yes, that's correct.
And they're all the pre-orders.
Yep. So that's people who are setting orders to create volume pretty much.
Okay, so they have their orders, but their orders haven't necessarily been triggered.
There you go. Yep.
Because sometimes people set orders just as like, like kind of a shot in the dark.
Right. Yeah. And the market wants to drive to where the money is at, right?
Because
go ahead.
The order's at 60. Nvidia's not going to 60 anytime soon.
No.
You mean?
No. Again, to get all the way down here, it would have to break through a lot of up levels. There's a lot of levels in between. Where is that? 60. Well, 60 that we we're looking at before. But before it gets to 60, there's a lot of levels that people would buy it at before it even hit 60. If it drops down to 120, people are buying. It's at 129 now. If it drops down to 125 and 120, people will be buying it right then and there.
So there's not a lot of orders for 140 right now?
It's not a lot of volume there. Nope. You can see the up again, this is taken into the candle. It's taking the information based on the candles that we have in there. But the up is at 0, down is at 15 million. If we scrunch it up some more, we can probably get a better read to add in more data. So if we hover over there, we got about 5 million versus 21 million. So yeah, getting back up to 140 is going to be tough because we would have to break this node at 130, and then this node right here at what is that, 131 to 136. There's a lot of down volume versus up volume.
So is this chart kind of before the earnings? Is it sort of telling us that Nvidia is still kind of in consolidation zone? Like without the earnings, it's not going to break up to 140.
Yeah, there's people that's not seeing that. Now, when the earnings this is not telling us what's going to happen due to earnings. Now, earnings could flip this upside down or break it straight out of consolidation and shoot it up to 145, 150. So it's not giving us any help when it comes to earnings.
But when it goes to 150, like that is going to increase Nvidia's market cap. And
yeah, it's in a bubble. So the market,
so
Nvidia is in a bubble. So the market cap. Oh, go ahead.
Yeah, it's just going to make no sense.
Yeah,
like,
I mean, this is
it'll make no sense. Nvidia can't be worth that much.
Yeah, I mean, again, I think Nvidia is worth about maybe 1 trillion as far as market cap, maybe 1.5 trillion. That's true market cap. The rest of it is, a trend and it's inflated. But over time, the sales could match the price point and, make it worth it in the future. But then that means at some point we're going to find some consolidation. So yeah, if Nvidia went up to 150, the market cap wouldn't make any sense. But the market cap doesn't make any sense at the level that it's at now. That's kind of like the whole thing about a bubble or about a trend. It's like when Tesla was going crazy for the last 4 years, actually like 7 years. I want to say 6 or 7 years. But yeah, the technicals, yeah, NVIDIA is not attached to reality. So if you're looking at market cap, it doesn't make any sense and it probably shouldn't. Lisa, can I get a link to the VRVP breakdown video too? Yep, I'll post it in the chat for y'all once I pass it off to Mark. All right, any other questions? Great questions. Cool, let's keep it moving. All right, last two indicators. This is the MACD. The MACD stands for moving average convergence divergence. Again, another simple indicator. This is just telling you the type of pressure that's being applied to the stock. So if the blue line is on top, you got two lines. You have a red line, you have a blue line. This indicator, again, is simple. If the blue line is on top on the right-hand side, that means that the buying pressure is being applied. These two lines represent things, right? So the blue line represents buying pressure, red line represents selling pressure. So if the blue line is on top of the red line, that means that the buying pressure is dominant. So that means that the stock is going to want to go up and the pressure to buy the stock is being applied to the stock. So NVIDIA has been going up lately. Again, and this is just signifying and confirming that it is in a uptrend. Now, if this red line crosses this blue line and it is now dominant, then we're going to see that the selling pressure has taken over and the selling pressure is being applied to the stock and the stock is going to trend down. If you have a hard time looking at these lines and these squiggly crossovers, fine. Check the histogram behind. The histogram behind the lines are going to represent the same information, just in a different way. So if you look at this green is signifying that we are in a buying pressure trend. So this means anytime you see that green, the buying pressure is on top of the selling pressure. The blue line is on top of the red line for as long as we see this green. Now, once it flips over to red, that means that the red line is now dominant and the selling pressure is being applied and the stock is going down until it crosses back over. So again, easiest way, just look at the right-hand side. If blue is on top, that means that the buying pressure is being applied. The stock should be moving up. And if red is applied, that means that the selling pressure is being applied and the stock should be trending down. Now, something special happens when these trends change. It's called a MACD crossover. When you have the MACD crossover, it's going to print a nice size candle to either side. So for this example, we have the selling pressure being dominant, taking the stock down, 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 boom. Then we have a crossover right in this area to where the blue, the buying pressure takes over. And so once the buying pressure crosses over the selling pressure, right at this conjunction, we have a nice candle that's printed. Now, I'm not going to say it's going to be a giant, I don't know, green candle or a giant red candle if it's to the downside, but to start the trend going in the opposite direction, it's going to be a nice size candle, and it should be followed up by 2 or 3 additional candles to whatever side we have a crossover to. So a lot of people who trade options, they like to trade MACD crossovers. They like to wait until these two lines are extremely close, and then they like to play to either side of which one is going to pop. So if we have the blue line about to cross the red line like it did here, people will load up on calls or buy shares. And then once it crosses over, they get that nice thump from the MACD crossing over. And then they either take profits on the way up or they add on the way up, depending on their strategy. Same thing for if it crosses over to the downside. So for instance, if you're in a stock at this point, you're watching the MACD, it's taking you up, and you're wondering like, man, I've been in this stock for a while. I've been making money almost every day. Where to get out? Well, you don't want to get caught in this MACD crossover, because if you get caught in this MACD crossover, look at what happened. You're up this whole time on profit, boom, it crossed over and took you all the way down. So up here before the MACD crossed over to the downside would probably be the best place to take profit, because again, you don't know once it decides to go down how far it's going to go, and then when you're going to get another chance for that crossover to come back and save you. So again, really simple. MACD is a trend indicator, and check the histogram if you have a hard time reading the lines. Do I have any questions? Drink some water here. All righty, cool. Keep it moving. Last indicator before we, again, if you all have any stocks, you can go ahead and put them in the chat. So once we get to that section, which is right after this, we can go ahead and break down some of those stocks for you. All right, last indicator is the stock RSI, or some people call it the Stoke. It's short for stochastics RSI. This RSI is basically telling you how much momentum, back up, how much momentum, tongue twisters today. All right, how much momentum the stock is going to have to either side. So if, and this one is going to range in a different way than a normal RSI. So again, remember, you have the normal RSI, which is up here, and it has this range from 30 to 70. The stochastic has a range as well, but it functions slightly different. So this range is from 20 instead of 30. This goes from 20 to 80, right? But this RSI is extremely sensitive to price fluctuation. So for instance, we're looking at NVIDIA. NVIDIA is at 129. If NVIDIA pulled down to 125, guess what? This line right here, that's at what, 84, could come all the way down to 50 just by NVIDIA pulling back $5. So this indicator is extremely sensitive. And the thing that that's good about this one is that it likes to frequent 0. So it'll come all the way, it'll break past 20, come all the way down here to 0, and then it likes to frequent 100. So when you're looking at these lines, the 20, 50, and the 80, these are just stops along the way. So we're looking at this line here. It is at 84 in the blue. It's coming down. We're looking at a resting point being at 80. If it breaks through 80, the next resting point is 50, 20, 0. It could come down to 80 and then bounce, go back up to 100 for a reset. It could come down to 50 and bounce and go back up. So these levels are levels to check it at 80, 50, 20, and 0 because it's coming to the downside. Now, if you're trading a stock and you want it to go up, and let's say these stochastics, you check it and it's all the way down here at 0, that's actually going to be good, because if your stochastics is down here at 0, again, this is the momentum indicator. The MACD is the trend indicator. So this is going to tell you that we're down here at 0. We have a lot of energy and momentum to take us all the way up to 100. That means that the stock has a lot of space to rise before it runs into any consolidation or hiccup. Once the stock's stochastic RSI reaches 100, that's when it's going to start to slow down. Its momentum is going to slow, and then it's going to need a reset. And you can see that when we look at NVIDIA, it was running up from what, 90, boom, it hit this 130 area, and it just started to slow its momentum. It was shooting up, climbing up for the last, 2 weeks. Boom, it hits around 130, and it starts to just slow and mosey on for a second to figure out if it's going to pull down or if it's going to continue to break higher. So again, that's being represented on the stochastics. We can see a slowdown. It was at 100. It's down to 84. We could see it pull back to 80 and then bounce higher, depending on what we see on the chart. But that is the stochastics. Do I have any questions over any of the indicators that we've covered? Perfect. All right, cool. I'm going to go ahead and pass it off to Mark so he can cover the you all's picks.
Appreciate it. Give me 1 second to share my screen. Okay. All right, so I see we have a few in the chat. So I'll start with, there's one over NVIDIA. So Micron Technology will be next. And I'll start for all of these. I'm going to start off on the weekly and then work to the daily just to see what we're seeing. All right. So looking at the weekly, we see the current price is at $102 for MU. Our support that we can draw, again, is going to be at this 50-week moving average, which is sitting at about $97.80. So that's going to be our first support. So if the stock was to be going down, we're going to see it try to come and test this $97.80 range. From there, we're looking to see if it can reject. Can it reject this price? If it rejects this price, then we could be seeing it go back up to about 106. And if it was to break below this point, we're going to be seeing it try to get back to about $87. So that's what it is so far. And again, if it breaks our resistance at 106, we're going to be seeing it try to get back to this 113 range. And looking at the weekly for the next few weeks, eventually it looks like this should start to trend back upwards. Looking at where the stochastic RSI level is at, it's in that oversold region. And again, like Ladarius just mentioned, anytime the stochastic is in the oversold region, it's got to get back to this overbought region. Now, how long that's going to take, we're not sure. No one knows the answer to that. But eventually over time, this should start to rise back up. And again, before it begins to rise up, we could see it come back and try to test this $97 range. Looking at the MACD, what I want to see for this MACD, I want to see this buying pressure, the blue line, get a little bit closer to that selling pressure, my red or orange line. It looks orange and red at the same time for me. I might be colorblind. But for this selling pressure, I want to see my buying pressure start to curve upwards, start to point upwards and get closer to this selling pressure, the red line, before I start to get into my trades, just because I know with that, if we have a good stochastic RSI level, that's could show us that the momentum could bring us to a uptrend, and this should break us above this 107 region. And again, this might take weeks for it to develop, so just be on the lookout. But for this week, we're probably going to see a trading range in between 106 and 97. And let's look at the daily just to see. All right. So we're looking at the daily. See a few things on the daily. So for the daily, again, we have the current price was testing a 200-day moving average, which anytime a stock price is testing one of those moving averages, you can use that as either the support or resistance line. So in this case, 200, because the price is above it, is treating this as its resistance area, and it's trying to break above it. If it can break above this area, we could see it get to this 106 range. If it was to reject this, then we're going to see it probably get back to this $98 range that we have here, $98. And if it was to break below that, we're probably going to be seeing it get to 87. Looking at this stock for the daily, if it was to be cooling down, it looks like it'll break below this $98 range just because of where my stochastic RSI level is at on the daily. On the daily time frame, again, it's really high. It's in the overbought region, excuse me, and it's starting to try to come down. And pair that with where the MACD is at. If we can see this buying pressure start to decrease more, again, we're going to see a crossover to the downside. And that crossover to the downside will probably give us enough momentum to break below this $98 range and potentially start to decrease even further. And if it was to break below that $98 range, we're going to be seeing it get to 87. And again, if it was to break above this 200, it's first going to try to break 106. And if it can break above that, we're going to be seeing it get to 113. But looking at it so far, it looks like this may be on a cool down period. So just be a little bit careful because of where that stochastic RSI level is at. And we're really close. We're not there yet, but we're really close to a MACD crossover to the downside. So I'll just be a little bit careful to see what happens with this stock price on Monday. Any questions on MU? The next one we had was ARM Holdings. Let's take a look at start off with the weekly. So ARM Holdings. So again, range for the ARM Holdings is currently in between two previous resistance and support lines we drawn. It's in between 138 and 128. So if it was to break below this level, our current support, which it looks like it's testing it, maybe it'll break below it. If it was to break below it, we could see this try to get back. I'm gonna draw them tight. Could see it try to get to 130. So if it was to go below 130, we could be seeing this try to get to 123.40. Excuse me, $124. Excuse me, so much. And if it was to break below that, you have a nice more support here at about 110. Now, if it was to reject our current support at 130 and try to trend upwards, it's going to try to test this 140 range. And if it breaks above that, then it's going to test 146. And we're going to look at the daily chart as well to see what's happening for this week. But this one is also look like it has the stochastic RSI level really low, sitting in that oversold region on the weekly. So throughout the next few months, we probably will see the stock price rise in values at some point. And with that rise, we'll see that MACD crossover also go up. So let's check the daily and see what's going to happen for this week. So just like MU, stochastic RSI level is going to be high. It's currently testing that resistance at 138. If we was to see this, reject this price at resistance and trend downwards, again, it's going to test 130. And then after that, if it breaks below that, it's going to come and try to test 125. Where this stochastic RSI level is at, this could be a place to where it needs to cool down. And with that cool down, again, that's going to also cause that MACD to also cool down as well and pull back. So we may see a crossover to the downside as well on that MACD. So just be on the lookout. What you're looking for this week is, can we break above 138? If we can break above 138, we're going to be going to 146. And if we was to reject 138, we're going to first go to 130. And if we was to break underneath that, we're going to then test 124. So that's what I see at this point for this stock. It looks more than likely it'll probably have a cool down factor, especially just looking at where that stochastic RSI level is at. It's pretty high. It can stay above there. We have seen that. I do know NVIDIA have earnings this week, so we may see an increase in value. But other than that, it looks like that this needs to cool down. Any questions on ARM Holdings? Perfect. Check out AMD, fans microchips. Again, a lot of the semiconductors, because of NVIDIA earnings, we may see a run up, but other than that, it's looking like they all need to have a cool down period, especially for this week, just looking at the daily chart. Again, stochastic RSI level is really high. We could see this, what we probably will see with this is because we have a cluster of the moving averages together. Again, it's going to treat about 158 as its resistance level. If it could break above that, then we're going to see it get to about 146. If it was to reject this current resistance area at 157, 158, we're going to be seeing AMD pull back down first to about 143. And then after that, we'll probably start to see it try to pull down to 130. And that may take a few weeks for it to actually get to 130. So for this week, what we're looking at is if it rejects this price, it's probably going to be going to about 143. And if it breaks above our resistance area, it's going to first be trying to test 162. And if it can break above that, we're going to be seeing 162. But for this one, with that stochastic being so high, I will wait a little bit before I try to get into a trade, just because I know when the stochastic is high, it has to cool down. And that cool down period can have us go back down to about 144. So I'll just be a little bit careful trying to enter a trade at this point on AMD.
Hey, Mark, I got a question.
Go ahead.
What do you look for when you're trying to look for this one and you're looking for a sell? What do you look for before you get into a sell trade on this one?
So if I'm looking to get into a sale on this, what I'm basically looking for is I'm waiting to see, can we reject this these moving averages. If we can reject this 157 zone where we have these two clusters of moving average, the 50 moving average and the 100-day moving average, if we can reject that and start to pull back, I'm then looking to get into sales at target price would be at about 145 for put options, and that would be where I'd be looking to get into a sale at.
Copy. Right on.
Mm-hmm. Yeah, so I'm just looking for rejection because all these indicators are starting to show me that this does have room to go down. So if that stochastic pulls back, that's going to pull back that MACD, and that's going to give me a strong indication that this could pull back all the way to that 144. A good question. That's a great question.
Right on.
All right. So that was AMD. Any other questions on AMD? Perfect. Perfect. So next, we have is Meta. Let's look at Meta. See what it's saying. Okay, so on the weekly chart of Meta, it's looking like overall they're making a bullish flag. We drew this maybe a couple sessions ago. We drew this, but it looks like it's making a bullish flag. And what we're looking to see is, can it break above these areas? If it can, then we could continue to see this go on an uptrend. This is all-time high, so I wouldn't necessarily say that where this flagpole is at, I wouldn't use that as the calculation to my target price. But this is in the all-time highs level, so this could still be on the uptrend with a little pullback maybe this week that we might see. But overall, it looks like this is setting up to continue to go up in value. The MACD is really close on the weekly to have a crossover to the upside. The stochastic RSI levels is in a nice spot where it's in that neutral zone pointing upwards. So we know it's on the move to trying to become oversold. So it looks like we still probably have time to make more trades on this. And the RSI level, it is above the sweet spot, but we can see that the RSI level can get back to 82. And it still isn't necessarily hitting that 70 zone that is the overbought region. So we still have, you could still potentially get into a few trades. Now for target prices, because this is all-time high levels, I like to tell people just to use $5 to $10 increments as target prices. So if this was to break above this price, we probably have at 130. The next place it'll get to is going to be at about 135, 140 could be the next places that we see. Overall, it looks like it was rejecting these moving averages. We see it went the 20-week moving average. We see it went underneath it. It went underneath it for a few weeks, and then it broke back above it. So we could be seeing this try to get back to that. We could be seeing this try to get to about 130, 135 in the next few weeks, especially paired with that MACD. If we have that crossover to the upside, that's going to give us the trend that is going upwards, and where and because the stochastic RSI level still has room to that bought region, we could see the momentum we need to continue to see this go up. And that's on the weekly. Let's look at the daily to see if we may see some pullback this week before we start to see that increase. All right, perfect. So and here, daily chart showing us we do need some pullback. It looks like that's going to happen. So with that pullback, what's going to happen is we can see this first break below to these moving averages we have, which is going to be at about 508. We could potentially see this get to 508. And then from at 508, I want to see what happens. Can it reject this area? If it rejects this area, then we could be seeing it just get back to the 530 range. Where the stochastic RSI level is at, it looks like it's going to become, for this week, it's going to be on a downtrend. And we had that MACD crossover is getting close to having that crossover to the downside. So I would be just a little bit iffy and wait for the next week to see exactly how it plays out. I wouldn't just hop into the trade first thing Monday just because we have indications on this daily chart that we could be seeing a little cool down before we start to see an increase in value. So, and if it was to cool down, again, first place is going to come and test us about 508. And then after that, if it breaks below that, we're going to be seeing it get to about 490. It's going to be where we can potentially see it. And with this, again, this MACD crossover and the RSI level, because the MACD is about to have that crossover to the downside, and where the stochastic RSI level was at, once this starts to go down, we could see that break below and actually get to that 490. So just be a little bit careful. If you're looking to do sales on this, what I'm looking for is I'm looking to see, can we get a red day? If we can get a red day, I will have my first target price somewhere at about, I have support at 509. I will have my first target price somewhere at about 515 for my put options. And then once it hits that level, I can go ahead, get out that trade, and then wait for it to test this 507 range. And if it was to break below that, you can then get into some more puts and use the 590 range as your target prices as well. So that's how I'll be looking for the weekly, for the daily, for this week, excuse me. That's how I'll be looking to trade Meta. It looks like it needs to cool down a little bit. But overall, on the week, so the next few weeks, maybe months, we probably will be seeing it still in the uptick or an increase in value from a weekly chart. Any questions on that? Let's break off really quick and take a look at see someone else put some stocks in there to look at, so I'll take a look at some of those. Trip limited. Let's check out the weekly for this one. This is a new one. All right. So make my trip limited is currently testing, as you can see, all-time highs. So again, anytime it starts testing this area, if it breaks above this support or this resistance line we can draw here, if it breaks above that, try to treat it in $5 to $10 increments. So the next place this can potentially make it to is going to be at about 105. It's going to be the next place if it was to continue to go up. Looking at the weekly, it does look like from the stochastic, it still has room to go up. So we may see it get to that 105, 110 range. And we had a rejection on the MACD. So this could still be in the uptrend. And then we do have the RSI level is getting a little high, but we have a little bit of room because we see previously it's gotten to 80. So we do have room on that RSI level to continue to go up. If it was to continue to go up, I'm looking at target prices at about 105 or 110. 105 would be where I would be thinking they could potentially go to. And that's the weekly, so it may take a month for you to see that happen, or maybe 2 or 3 weeks for it to happen. If we look at the daily, from the daily, it's looking like it's hitting this top, right? It's looking like it needs to go ahead and start to cool down just because of where the stochastic is at. It can stay above the stochastic a little bit longer, but it's looking like just on the daily, it's hitting that ceiling. It's hitting the ceiling and it's trying to go back to the floor and test that floor level. The first place it'll go and test, we can draw a nice little support line here at about $95 is where we can call our support. $95, $96 could be our support level. Excuse me. Or we can pull it even further back and call it about 94, just because that's our 20-day moving average. So we'll just use 94 as our support line or our floor. So if this stock price was to pull back this week, the first place it's going to go and try to test is going to be 94. After that, if it breaks below that area, the next place it's going to go and test is going to be this 50-day moving average. 50-day moving average is sitting at about $88. So that's going to be the next place, or $89. That's the next place it can test. Now, it may treat this because we're in chronological order, like Darius mentioned earlier, anytime we're in chronological order where we have 20, 50, 100, 200 stacked in this order, we see the stock price likes to bounce off of this 20-day. So what we could see happen is we could see this stock dip down to about $94, and then from there try to reject this price and then continue to increase. And that continuation, the increase will probably end up driving us to like that 105 range, getting us closer to higher highs than we had, or all-time highs. But currently the all-time high is 100, so it just hit that all-time high. And it hit it previously, we can see here, but that's the current all-time high. So, and it's testing that area a lot. So it's either going to break above that to try to get to 105, or it's going to go ahead and reject that area. From where the stochastic is looking at this week, is looking like we'll probably see it reject this area and decrease in value. And if it does decrease again, it's going to go to about 94. And from 94 is where I'm looking to see what happens. Once it hits 94, can it reject that 20-day? If it rejects that 20-day, we're going to see it try to get back to 100. If it doesn't, we're then going to see it get to 88. Any questions on MMYT? Perfect. So let's look at little HWM. Okay. HWM. Okay. So this one is currently testing all-time highs. Again, treating that as it's sailing. It's looking like it needs to cool down. Stochastic is a little bit in that oversold range. It does have a little bit of room to continue to go up, so we could see this go up a little bit more. If it was, it'll probably try to get to the $100 range. Again, it's at 97.08, so this is all-time highs. The next $5 increment from 97 is going to be 100, so that's could be the potential next place that it can get to. From there, if it's going to reject this area, you can first try to say that it'll probably try to get to 90. And then after that, we're going to try to see it get back to this 80 range, which is our 20-week moving average. Again, that's a strong line and it's in chronological order. And we can see it's been rejecting that area and then slowly getting back to it. So we could be seeing this pull back to about 90 and then consolidate from there. And then that consolidation will cause that 20-day moving average to also move up before it rejects it and trends upwards. And that's on the weekly. The RSI level on the weekly is pretty high, so I would just be a little bit careful. Ideally, I'm not sure if you're trying to long-term hold this or if you're trying to swing trade it, but I would try to wait for this RSI level to cool down a little bit because 78 is pretty cool. It's pretty hot for a stock price, especially paired with that stochastic RSI level being that high as well. Eventually, this needs to cool down, and you don't want to get caught here. You don't want to buy in at $100 and then it pulls back all the way to $80 and you're losing almost $20, right? So per share that you have. So just be a little bit careful and wait for it to cool down if you're trying to hold it for a long term, because you probably can find a better price if you're looking to hold it long term, looking at the weekly. And if we was to look at the daily, we can see stochastic RSI level is pretty high, hitting that oversold region. And what I would be a little weary of is this crossover MACD to the downside. If we was to have this crossover, that's going to pull that stochastic RSI level down with it. And then that could probably just, because we're testing our resistance, our ceiling is probably going to, with a crossover to the downside, this is probably going to end up pulling back and breaking below our 20-day moving average and testing this $90 range. So I'll just be on the lookout this weekly to see what happens. Can we, if it pulls back, can we break below this 20-day moving average? If we can break below this 20-day moving average, we're going to be going to that $90 range. And then from there, I'm looking to see, okay, it's hitting 90. Can it stay above this $90 range? If it can, then we'll probably see it hit back to 97. But if it can't, and the indicators are showing me that we still have pressure to the downside, then we're going to more than likely be seeing this get to about $84, $85 as our next level. So that's what I'm seeing for HWM. Any questions so far? Go ahead.
Mark, when you have your moving averages, can you go into your indicators so I can see which moving average you have and who it's by?
Oh, you mean the settings or?
No, like if you pick no. Like if you go into indicators, it'll say by like Ripster.
Oh, okay.
Or by, yeah.
So for mine, I'm using MA. Let me just make sure that's the right one. Let me see something. I think I can see it from. If we click on this. Get rid of it and then put it back. Yeah. So I'm just using that generic MA ribbon. So it's just called moving average ribbon.
Okay.
And this is just generic.
Okay.
So it's the one made by TradingView. And all I did was I just changed the colors for myself. I know Ladarius keeps it orange and just has it changing, but I changed it to different colors. That's all I did different.
Okay. Do you change your inputs or styles or anything like that as well?
No, I just changed just simply the color. That's it.
Just colors. Okay.
Yeah, I keep it 20, 50, 100, 200, and it's SMA for the closing price, and I just changed the colors.
Okay. Thank you.
Mm-hmm. Any other questions? perfect. A little bit just to keep us on track. Once Ladarius goes over his picks, I see that I do have a few other ones like SOXL, Coin. I didn't do TSM and Microsoft. So after he does his picks, if I still have time to go over those, I'll go over them. If not, there I can put them in the Discord, the Meta, TSM, Microsoft, and the Coin. And then the SOX, I know Ross is in the meetup, so I can put a breakdown in the meetup as well. Appreciate y'all.
Sorry about that. There we go. All right, cool. I appreciate that, Mark. I have a few. Let me see, what time is it? We may be able to get through all of mine. If we do, then I can go ahead and knock out the rest of the ones in the chat. But let's see what we can make it through. So it's a few I want to pay attention to. Where's my screen? Boom. All right, cool. All right. So the picks for the week, I have a few listed here. I have SMH, I have Lin, I have DKS, SQs or SQQQ, and I have Coin. Again, we're going to try to get through all of them. If not, I'll post the rest in the Discord. But I think yeah, 45 minutes should be enough. All right. SMH. So SMH is a semiconductor ETF. So if you've been trading NVIDIA for the last, I don't know, year, 2 years, or AMD or any of those semiconductor stocks, this is a semiconductor ETF. So you could have traded, if you wanted to go the safest route without being exposed to an individual stock, then you could trade this ETF, which is just a basket of different stocks. And it's led, I want to say the largest percentage is NVIDIA, followed by AMD or Microsoft. So yeah, again, pretty much an AI ETF. So this is a good way to, diversify if you don't want to just pick individual stocks. But this is one that I will watch this week because we do have NVIDIA's earnings coming up on Wednesday. I want to say it's Wednesday in the after hours after the market closes. So it's going to be interesting to see what happens with this. I'm looking at this as a range of what can happen to majority of the stocks that are in this index. Again, you do have a little bit of AMD, NVIDIA. I think there's some ARM, Taiwan Semiconductor, all of the major AI chip stocks that are in the chip race. I want to say they're in this ETF. So the levels that I'm watching right now to the downside would be 240 because we have a lot of test and breakout along this price point. Also, right where we're at, about 250 to 252 seems to be a choke point to where we started to slow. Again, this was going on a crazy run up from 208. Boom, it hit right here at about 250 and started to slow and pull back. So we're looking at it bouncing in between this range before it figures out which way it wants to go. And coincidentally, we do have the 50 MA above and we have the 100 below. So it's kind of like sandwiching the price action in between these two moving averages, and that 20 is curving up. So if this breaks out to the upside, the next level I'm looking at is about 260 right here. Again, consolidation right here tells us that this could be the next level of the next high level for resistance. And then if we break to the downside, I'm still looking at the top side of that 20 MA at 235. I would say worst case scenario. And you can also see along that line, we have some more action happening here. And then we had a rejection here. If it goes any lower, then I'm saying 230. So it looks like increments of 5 is what this is going to be breaking in between. And honestly, as we get closer and closer to NVIDIA's earnings on Wednesday, we may see the market at a standstill. We may see some consolidation. The funny thing is that, remember when we looked at the economic report calendar and we saw that the major events are going to take place, or the major reports are going to come out on Thursday and Friday. Well, Wednesday we have NVIDIA's earnings. So it's like, I'm not going to say they did it on purpose, but it's just funny how the bricks lay. When you're trying to just have a smooth week in the market, there's always something that can throw the plan to either side when you're trying to trade. So Wednesday you have NVIDIA's earnings. And then Thursday and Friday, you have two separate major reports as far as inflation and interest rates. So it's going to be interesting. But again, if we pull back, right now I'm looking at 240 being a bounce point. Right now it's at 248. So it's testing the top side of this resistance. If it breaks through, then I'm looking at 251, 252 as the level to conquer before we can move higher to 260. So if we back out and we look at it with the other indicators, we can see that if it decides to move up, we do have space on the normal RSI. It is only at 54, and it has space to go all the way up to 70 before we count it as being overbought. Now, if we look at the MACD, we can see, of course, we're already in the uptrend. That's easy to tell. But we can also see on the histogram that this green, this light green right here is telling us that the trend up is starting to weaken. Anytime you see the little powder green amongst the strong green color, that means that it's starting to weaken. Anytime you see this powder pink red, that means it's starting to weaken on the downside. So since we're in the uptrend, we got this dark green. Zoom in. So we got this dark green that shows us that it was gaining in strength, and now we have this light green that shows that it's getting a little faint and it's starting to lose some of its steam. That doesn't mean that it's automatically going to come back to the downside. It just means that we could be going into a level of or a period of consolidation again with NVIDIA's earnings coming up, and NVIDIA being a large portion of this ETF percentage wise. So again, what I want to see is a bounce. Does it have it has the makeup to move higher? Even if you look at the stochastics, if it comes all the way down to 80, it could bounce right back up to 100. That will push this up from 248 to about 255, 260 is what I'm seeing. And again, once we get to this point at 260, if we make it there, then that's another point. That's another choke point that we'll have to reconsider and see if we consolidate or pull back. I'm thinking if we break higher than where we are now, we hit 260 and then we possibly pull back. Again, it all depends on NVIDIA's earnings. I'm thinking they're going to beat earnings, but beating earnings means nothing. You can beat earnings and then the stock goes down 20%, or you can miss earnings and the stock goes up 20%. So beating or missing earnings doesn't really tell you anything about which direction the stock is going to choose to go in. But yeah, that's what I'm seeing for SMH. And this also goes for the stocks that are in the semiconductor space. So if you're looking at AMD, if you're looking at TSM, ARM, all of those are going to be moving with this. You can watch this semiconductor as a reference for your trade. Do I have any questions on SMH? All right, cool. Silence is a thumbs up for me. Let's keep it moving. All right. Next one, Lynn. Oh, I'm on a 3-month chart. Let me back up. This is the 1 day first. All right, Lynn. So this is one that I was talking about. I think I talked about this last week. And we actually set up the play in the Discord. This one, we're watching for a break right here above 180. And I think at the time we were down here like 175, 160. What is this? 1, 2, 3, 4, 5. Actually, we were down here. So this is a 5-day movement. In 5 days, this went from 172 all the way up to about 185. Actually, the high is like almost 186 since we called it. So if you would have jumped into this trade, easy swing trade to the upside, it was making a really nice bullish pattern to the upside. We knew that we would get a shot at 180. We didn't know if it would break, but it smashed right through 180 and went all the way up to about 186. And then that RSI landed us perfectly at about 70. So when we were looking at it, this was at, I think, about 59, 60. I want to say somewhere in the low 60s, I want to say. Not quite 59, maybe a little bit higher, but nice pattern that it's making. Honestly, I think this stock is going for about 200 to 220. Before it gets there, it's probably going to need to cool off because it's been running since it consolidated at about 170. We did get that MACD crossover that we were waiting on. When we looked last week, we had a pending MACD crossover. It wasn't crossed over already, but we can see that this week, looking backwards, we actually got that MACD crossover, which sent us to the upside. So easy play. And if you're in the Discord, I did post the option setup that you could have got in. I think this one is You see, I am up. Let me see if I can bring it up in 2 seconds. If I can't, we'll keep it moving. All right, yeah, I'm up 93%. There we go, 93.75% on this swing trade. So probably going to take profit soon because it looks like the stochastic is maxed out at 98. But this would have been a good move. Again, this is now now we're waiting to see if we're going to get a pullback, and we need to check other time frames. If you look at the 4-hour, you can see that we've been floating on the stochastics around 100. So this could move up a bit higher, but it looks like eventually this is going to have to cool off. RSI is at 374 on the 4-hour. Let's look at the 1 week. We check the 1 week again. You see this bullish pattern that it's making on this side, 3 green candles, small pullback, and then a push to the upside. So on the weekly, it looks like we do have some more space. It is only at 66 out of 70. So we could go up to 70, pushing this up to about 190. What is it at 180 now? And it looks like we're all-time high. Yep, all-time highs. So like Mark said, $5 to $10 increments to the upside, since this is a $180 stock. And yeah, honestly, I think that the more and more we hear about these interest rate cuts, Leonard, if you don't know about it, it is a it is in the home building sector. I know I'm getting tongue tied today, but you can see right here, it is a home building stock. So if you're into houses, yeah, I think that doing research on Leonard would be cool. But from a technical standpoint, it's making a really nice pattern. And again, we could see this go for about 200 to 220. This could actually be 250, depending on how it reacts from the rate cuts and how large the rate cuts are and how fast we're going to get them. But yep, this one is a good one, good trade. Let's move on to DKS. DKS is one that I've been talking about for about 2 weeks. This one, I was actually at, I think I got about 300%, a little bit over 300%, I want to say, on a swing trade for DKS. We started watching this one at 205, 204. It is at 240. Crazy run. A lot of people have been paying attention to the tech sector and the semiconductors, but there's a lot of other opportunities on the market. Again, there's thousands of stocks to trade. You don't have to trade one thing. You know, sometimes the money rotates. Doesn't mean that you have to just sell off what you have to just follow the, try to follow all of the trends, because we don't have unlimited money. But it is good to, to find other stocks to trade, especially when the stocks that you're trading are already maxed out, that you've already made the money and you need to move somewhere else. DKS is a really nice one. And the thing I like about this one is that it looks like it has a lot to give. Really nice bullish setup. It came from all the way down here at 107. It actually gapped up from 186 to like 220. That was off of earnings, major pop to the upside. And then it consolidated for, was that March to August? Sheesh, what's that, 4 or 5 months of consolidation before breaking to the upside. So now it's ready to break to the upside. We may get a retest back down to 229. But right now it is already at pretty much 240, and it can continue higher. I think this is easily, I think this is easily a $300 stock. The earnings that it's going to have on next Wednesday, not this Wednesday, will tell us a lot. And honestly, I think that this run up right here is in anticipation for the earnings, because the stock has been killing it for like the last, 3 earnings. And then they missed one. What is that? What is this? They missed it in August of 23. And I mean, you can see if I scrunch it up, all of the E's at the bottom are beats for them. So DKS, Dick's Sporting Goods, is pretty good stock, and it is breaking out of consolidation. I think, again, if we do get these interest rate cuts and it's at a nice size, like if we get, 0.25, 0.5, 0.75s, I think those are nice. But I think if we get more of a 0.5 or a 0.75 rate cut, then we could see stocks like this flying. So again, tech is notoriously going to outperform, but with opportunities like this, again, we've been watching this one for a while. You could have got in at 205. Right now it's at 240. We're probably going to see it continue higher as we just watch it. Again, it is breaking out of this consolidation, and it could go easily $300. Do I have any questions on DKS? Perfect, perfect, perfect. All right. This one, I want to talk about this one. All right. So when everything is going good, we all like to pick the stocks that are going up, of course. But and unless something bad happens, people uh, people react and try to find a safe haven. Well, with this stock that I'm looking at, this could be one of your safe havens for not for a long time, but just to play against the market. For instance, the market is going up, right? So the SQQQ basically goes against the QQQ, which is an index. Um, it reacts in the opposite direction. So if the Qs go up, this stock is going to go down. If the Qs go down, this stock is going to go up. So looking at this stock, and you can also chart the levels. When you look at the levels for this one, it looks like it is at a level of consolidation, right? It has touched this level a lot, and it actually could move up here about $1, and at a high point it could move up to here at about $10. The reason why I'm watching this stock is because just in case we have a rejection, just in case we have a pullback from Nvidia, where do we go? Right? If you're looking for options, if you're playing options in the form of security, meaning the market is going up, you're buying puts, which is a bet that the market is going to go down while the market is going up, and the market does pull back from whatever happens with Nvidia, then you kind of have a level of protection to where you can trade options on this, or you can buy shares of it. And once it goes down, this goes up. You can reverse the cycle, take your winnings from this trade, put it in whatever stock you want while it's down, and then when it goes back up, rinse and repeat. So I just wanted to put this one on your radar, put this one on your watch list, because I am watching this one this week, just in case Nvidia pulls back. Because if Nvidia pulls back, I mean, let's be honest here. It's going to take the market with it. Most of the tech stocks that are leading the market right now have something to do with AI. And if Nvidia, the king of AI right now, pulls back, we're going to see the market pull back. I don't think we're going to see like a hole blown in it like we did. What was that, like 2 weeks ago? I don't think we're going to see anything major like that. But I could see a nice sizable pullback and some consolidation, because if we get a pullback from Nvidia's earnings, people are going to be afraid. We just had a major pullback 2 weeks ago, and if we get a blowout from Nvidia's earnings to the downside, then we may see people rotating into different sectors just to try to manage their risk. So again, have this one on your watch list. Another one that you could look at that operates the same way would be the VXX. You can see this shot up, this went sky high, all the way up to 90. This happened when the market pretty much imploded. It shot up because, again, this goes up when the market goes down. So the market was going down. This went on a crazy tear, and then it cooled off and it came back down. So if Nvidia creates some volatility, it pulls back. This one is going to be popping because of that volatility. The other one is going, if you're going to pair it with the Qs. Lisa, you have a question?
Yeah. So you're saying, as a hedge for like Nvidia and the whole AI market or whatever, that you would buy these in advance of earnings, like buy options on these in advance of earnings, and only exercise them if Nvidia tanks?
All right. Not necessarily. So let me break a little bit of that down. So with these, you can buy options. You can also buy the shares. So if you buy the shares on them, then it's less riskier. But if you buy the options and it goes the wrong way, then it's like, okay, there's a nice sizable percentage you could miss out on if Nvidia goes 10, 20%. Honestly, I think if Nvidia pops to the upside, we're probably going to see 5, maybe 10%, nothing crazy. But yeah, to be safe, it depends on risk management. If you want to be extremely safe, you can buy a few of, so you have options. You can buy a few shares of VXX, you can buy a few shares of the Qs, whatever your preference is and whatever you're charting against. Also, you could buy puts. You could buy puts that are in the money. Puts are, again, options that make money when the stock go down. It's just a form of insurance. And insurance, sometimes you pay insurance, but you get nothing from it. But you just pay for the fact of being safe, is what I'm saying.
I guess I'm saying, what would Ladarius do?
I do, yeah. So what I'm going to do is I'm going to grab a couple of each VXX the Qs, and then honestly, I'm gonna grab some puts on the SPY, just as a hedge. I'm not gonna spend any crazy money on it, but with the volatility, if you spend a little bit of money on these, and again, this one blew up when the market went down, so it didn't take that much. This was at what, 45, and pretty much doubled when the market tanked. It just takes a few just to play some, just to play some defense. If I'm wrong, I'm fine with losing the money on buying these, because again, these are going to go down as the market goes up. But that's what I'm looking at doing. I'm not going to buy them like tomorrow, but getting closer and closer to NVIDIA's earnings. If NVIDIA starts to go up going into earnings, like let's say Tuesday evening and then Wednesday throughout the day, NVIDIA is up, then yeah, I'm probably going to add more of these just to be safe. But if NVIDIA is like consolidating and trading like flat for like 3 days in a row, then I'm like, okay, this could be a 50-50. But if it's already going up, and due to the fact that it just recovered, I'm looking at adding more VXX, more SQs, and again, I'm looking at some spot puts. I don't think I'm playing any direct puts on NVIDIA. I'm not that bold. Does that help, Lisa?
Yes and no.
Where are you stuck at? You said, what would you do? I told you, what would I do?
Yeah. Okay. Well, I was like furiously taking notes. It took a whole page, LJ.
My bad.
Okay, so you're saying that closer to NVIDIA's earnings, like so Tuesday evening and Wednesday during the day, if NVIDIA is going up, then you would add more of these sort of hedge stocks because you'd be more concerned about it tanking. I was just kind of.
Yeah, I would be more concerned about it pulling back, especially if it's spiking going into earnings, because sometimes stocks spike going into earnings because they're going to sell off. Like the move that's predicted, like everyone is predicting for NVIDIA to beat its earnings, right? Like I don't think there's anyone that's like NVIDIA is going to miss on revenue or earnings. It's probably not. I doubt it is. But the reaction from that, it depends on how large of a margin it beats by on each, right? So it's going to beat, yes, but by how much? If it's a clear wash, it's just a blowout, then it's going to pop up to the upside. But if it's really close, then it's like, well, let's go ahead and start looking at the hedges. And then, yeah, so Ross is saying something, another thing in the chat is that, so time to buy hedges as well before the move. The cost for the hedge goes up a lot close to the event. Yeah, so if you're in, like, once NVIDIA starts to go down from the earnings, let's say the earnings print is nice, but NVIDIA still goes down. If you try to hedge, then it's kind of too late because the premium added to the hedges are already going to be factored in, especially if you're looking at options. Now, going into NVIDIA now, because we've been consolidating. If we keep consolidating, then I'm like, okay, same thing. But yeah, you want to grab your hedges earlier than everyone else, because if everyone switched to hedges, let's say tomorrow morning, everyone just turn and say, okay, NVIDIA's going down, we're switching to hedges. The premium for contracts are going to be through the roof. So you want to beat everyone to the punch. And then once they jump in and, start the bandwagon, you can go ahead and sell off, take profit.
Okay. I think I get that. Thank you.
What's the part you stuck at? The part you're stuck at is like when to do it?
I guess, yeah. I think I just I need to think about it and take a nap.
Yeah, with a hedge, again, a hedge is just protection, again, just insurance against a move that you don't want to happen. We don't want NVIDIA to go down, but if it does, it would be nice to be in position to catch a little something. You're not gonna, depending on how much NVIDIA you hold, but you want to catch a little something to have some money to buy the dip, that's generated from actually playing the hedge.
Okay. You mentioned that like a lot of the time the price will spike right before it tanks. Can you elaborate on that?
Yeah, so there's a thing called buy the rumor, sell the news. So if there's a lot of times when there's a rumor of a product or an earnings on the market, right before it, things will be great. Everything is up, the sun is shining, everything is going up, and then a hole will get blown into the stock, and then everything goes down. Because going into again, buy the rumor, sell the news means that we all know what's going to happen. We all know that, okay, NVIDIA is probably not going to miss on anything. right? So it's already going up. People are buying in anticipation that it's going to go up, when sometimes the run up before earnings is the actual run. So it's called buy the rumor, sell the news. So when the news actually comes out that NVIDIA did perform the way we thought, that's when a lot of people take profit. Because again, if we look at NVIDIA, we just have to do some market psychology, or market psychology. If NVIDIA was just down here at 91, 3 weeks ago, ran all the way up to, so it's up $40. It's up $40 from down here. When are these people going to take profit? The same people who bought down here at 91 have to take profit somewhere, right? So where do they take profit at? A lot of them are starting to take profit right here. This big red candle right here is telling you that some people took profit right there at about 130. It stayed there. It hit 130 and it stayed there for a few days too long. And then people said, all right, I'm out. Took profit, boom, it dropped down to 122, 123, and then they bought it right back up. People hopped in, but a lot of people took profits here. So profit taking has to happen. So that's why I'm saying, again, can't see the future. If I could, I would tell you. But anytime you have a crazy run up going into earnings, again, a stock can only go up by so much. It can't go to $1 million in 2 days, right? It takes time to actually get there. But the fact that it's moving this fast going into it means that there could be a chance that this is the move from the earnings. So there's a thing, buy the rumor, sell the news. Happens a lot. I've been in a lot of trades to where I was up. It was a trade. I was up. What was it? I was up like 375% on the trade that I had held for like 2 weeks and going into earnings, and I didn't take the profit. I sat and just watched it at one point and was just like, yep, this is good. I'm up 275. So if it goes down, it shouldn't take me out of profit. I'm up 375. I'm up crazy profit. But what happened is the earnings came out. As a matter of fact, I think that was Intel, I want to say. Yeah, it was like 3 of us actually trading, and we all lost money together that day. But up a crazy percent. And when the earnings came out, it went down because everyone pretty much already knew that the stock was going to go up, or the stock was going to beat its earnings. So it wasn't any surprise. The market moves off surprises, either to the upside or downside once it's surprised. But if we already know it's going to happen, there's no surprise. There's profit taking. Does that kind of help mentally, Lisa?
Yeah, actually. Especially the bit about the market moves on surprises, specifically, I guess. Thank you. You're gonna post in the Discord about every damn thing you do, right?
Yep. Yep, I will. Yeah, I will be posting. Yeah, these days lead up into NVIDIA is going to be important. But yeah, I'll be posting in the Discord for sure. So don't worry, Lisa. You'll be able to see what I'm thinking.
Okay, perfect. Thank you so much.
No problem. All right. I switched this from what? Oh, we were looking at a different stock. That's fine. All right, next stock, coin. What time are we at? We're at 7:42. Cool. Making some good time. Let me check the chat really quick. Time for hedges, well before, yep. And it takes some experience on timing the hedge buy. Yeah, yep. Definitely takes some experience on timing hedges. I'm not going to say I'm a master at timing, placing my hedges, but the higher that a stock climbs, like once it becomes unbelievably high, that's when I start looking at, okay, I need to look at some hedges. Like if I set a price target for a stock to go from 250 to 300 and is now at 335, I mean, that's kind of ridiculous. And eventually it's going to come back down. So I'm looking at a put, or I'm looking at the hedge at that point. So yeah, Ross, you making a great point there. All right, coin. Let's look at Coinbase. So Bitcoin has been moving. We can actually take a look at it. Was it Bit USD? Why did I put BitC? BTC.
Take the eye out.
Right. Caught it. Appreciate that, Yvonne. I was like, why am I put, yeah. But all right. Yeah, so it has been moving. Bitcoin is back at 64K. It had a lot of consolidation around 58 to 56, and it looks like it's testing a level of resistance. Let me scrunch this up to see. Man, this has been, Yeah, Bitcoin, if it breaks 69, 70K and then hits this level right here at about what 72, and it can stay above 72, we could see 75, 80 if it goes back for another test. It's been fighting that line right there at about 70 to 72 for a while. You can see how many times it touched it. And this is making a giant bull flag. Strong move up, extreme consolidation. And eventually, I think this is going to break out to the upside, and we could easily see Bitcoin around 80, maybe 90K. But first levels to get there is breaking and holding between 70 and 72. If we can land safely there, then breaking above 72 and moving higher up to 73, potentially 75 is what I would want to see. So looking at Coinbase is going to move with Bitcoin. Coinbase has been moving up. It is testing the 215. Yep, this is 215 right here. So it should be running right into this 215 level before it breaks that. I'm sorry, after it breaks that 215, we could be looking at 225. After 225, we're looking at 240, and then we're back up to 250 to 260 range. So Coinbase, it did sell off all the way down to 160, which was a nice buy point, but it was bought immediately back up to like 170, 180. It's riding off that 200. And what I would like to see is actually above 225 for me to feel safe. Right now it's above its 20 MA. It needs to get above its 50 and its 100. If it gets above its 50 and 100, then we can be testing that 240. And honestly, I think that this could go for 270 to 300 if Bitcoin decides to break out of that channel that we just looked at. So Coinbase is looking nice for a move to the upside again. This one, Coinbase, is a tricky trade. It's a new sector that, well, I'm calling it a new sector because honestly, I think that eventually crypto is going to be added to the S&P 500 at some point. They're already doing legislation to get, Bitcoin and Ethereum ETFs backed by Vanguard and Fidelity and all of the big banks. So I think that once the big banks step in and they start to regulate it and sell it to their customers in the form of ETFs and eventually actual Bitcoin, I think that then we're going to see an explosion. But by then, of course, the big banks are already in and they're going to be making money too. So right now, we're just in a period of consolidation. Like I said, 225 is where I would like to see Coinbase to feel safe for more buys, and it could move to the upside to 251. And when I say more buys, I mean if you're not in it long. If you're in Coinbase for the long ride, honestly, I think Coinbase could be $1,000 stock in the next 3-4 years. I always say that. But if you're just looking for a trade on Coinbase, 225 would be what I would be looking at, and a move up to 240, 250, 260 would be the price targets that I will be watching. If you're holding it for a long term, I mean, it's at what, 211 now? It's not a bad point to buy and hold long term. But again, I'm thinking trade wise, technical analysis wise, 225 to those same levels that I just mentioned. Do I have any questions? Ross, nope, I do not. Great question. I was just looking at those. I think it was Ty and I were looking at those bond ETFs recently, but currently I don't hold any. Great question. All right, cool. Any other questions? What time are we at? We're at 7:47, so about 7:50. So we're making perfect time. Any questions? All right, cool. So what I'll do is we'll go ahead and stop this section right here. I'll pass it off to Mark. Unless Mark, we could go. Mark, do you have any patterns of the week that you wanted to cover? We have about 10 minutes if you wanted to. Well, I don't know if we will have enough time.
Yeah, I don't think it's going to be enough time for a pattern of the week. I didn't have.
Okay, that's cool. Yeah, no, we can say the pattern of the week to the next time. But Ross had a question. How did TMDX work out for you from a couple weeks ago? Here it is. TMDX is now at 175. All-time highs is about 177. Still moving up. This one is still moving. So TMDX, honestly, Ross, is a long-term hold for me. Again, I keep saying I think this is a $300 stock. I was saying this when the stock was like $70. Now it's at 175. And again, the technology that they have and the way that the CEO moves is kind of crazy, but they don't have any competitors. I don't know any other company that's making organ care systems that can help like keep organs alive. And they have an aviation company where you can actually put the organs on a plane and send them to the donors. So, I mean, they're kind of in a league of their own with that. But yeah, TMDX is doing great. Thanks for bringing it up. All righty. Any other questions? And if not, what we'll do is go ahead and close it out. The rest of the stocks that I'm looking at and the rest of the stocks that I'll be making plays on, especially since this week we have NVIDIA's earnings, I'll be posting in the Discord. If you have any questions about the Discord, what it looks like, how it works, just stay a little bit after this and I can give you all a demo. And if not, if you decide not to join the Discord, that's fine. We won't ban you from coming to our sessions. We really don't care. But yeah, if you don't decide to join, then hopefully you decide to join in the future. If not, you're still welcome to come to these free sessions. But you're definitely missing out on a lot. We do have interweek sessions, one-on-ones, a lot to offer. So if you don't have any other questions, I'll go ahead and stop the recording here, and then we can go into the demo for the people that are interested in it. Let me check the chat, and all righty, cool. Let me stop sharing my screen. All right, well, wait, let me stop the recording first.